Hello and welcome to NDTV Profit. We are here at the Bank of Baroda head office here in Mumbai, Bandra complex, and I'm joined with Mr. Devdutt Chand, the MD and CEO of Bank of Baroda. Of course, so your bank reported Q2 results, and the results seem to be quite positive. Profit growth of 23%. You've got good NII growth about 7.5%. Non-interest income has also grown well. Specifically, the one point that was very good turned out to be the asset quality side of the story, where you've seen significant improvement year on year, quarter on quarter as well. I want to start this conversation with a question around operational transformation and the growth here at Bank of Baroda, right? The profit growth and the turnaround, of course, Bank of Baroda has always had a strong balance sheet, but this one seems a little different from the past. So if you can tell us what, over the last 2 quarters, this fiscal, last fiscal, how have things changed at Bank of Baroda?
First of all, thank you very much for giving me the opportunity. And let me say, Bank of Baroda, the performance has been very consistent for last 8-9 quarters. So whether it is net profit, whether it is the top line growth, whether it is the ROA that we have been guiding, it has been very consistent. And this quarter has been something special for us for 2 reasons. One is that we achieved a 25 lakhs crore of business. That's a top line number. And that's a significant in terms of scale, and we have achieved that this quarter. Secondly, the profit has been in excess of 5,000 crore for the first time in last many quarters. Earlier, the profit used to be more than 4,000 crore quarter to quarter, but this time it has gone above 5,000 crore. There are 2 reasons for that. One is that the profit out of the operation has been very strong. At the same time, the other income has seen a significant boost up because there are 2 factors who contributed. One is that treasury income has been very good this quarter. Secondly, the recovery out of the TWO, that's the return of accounts, that has been very strong. So I think it's a combination of all factors where it's operating growth, the profitability matrix, the kind of construct you want to have for the book in terms of both top line and bottom line, everything contributed to have a strong top line, at the same time a very good bottom line for the Q2.
I want to touch upon something that you mentioned during a discussion of the results after announcing, where you talked about the guidance for advances and deposit growth, right? You've tempered both those down by about 1 percentage point. If you could explain to our viewers the reason behind that and what that means on ground in terms of business growth.
So there are 2 factors here. Actually, when we gave a guidance at the beginning of the year in terms of deposit, it was 10 to 12%. And consequently, the advance growth that we projected was 12 to 14%. If you look at the Q1 and Q2 deposit growth, not only for Bank of Baroda, but also for the system, the deposit growth has been in single digit. Our growth in Q1 is almost slightly less than 9%, and growth in Q2 deposit is slightly above 9%. Considering that, when I look for the full year, achieving something on a higher band may not be possible. At the same time, we have been guiding the market saying that we as a bank want to reduce dependency on the bulk deposit. Funds are available in the wholesale market, but obviously at an elevated cost.
Correct.
I do not want to get into big time on that market. So considering everything, it's not a cut. I will put that as a recalibrating the entire the deposit guidance, keeping the actuals for 2 quarters, not only for Bank of Baroda but also for the system. At the same time, I also said that when I gave a guidance of 9 to 11%, I'll try to operate in the upper band. That means I'll try to get into that 11% growth.
Right.
And when we have changed the guidance on the deposit, obviously we don't have to widen the credit deposit gap. That's something debated in the market big time. So keeping the credit deposit at a very reasonable level, we recalibrated the advance growth also. That is 12 to 14% earlier. Now we made it 11 to 13%. Saying so, the segment of RAM would continue to grow stronger. Rather, the retail growth, which was above 20% earlier, continued to be more than 20%. Agri MSME, the quarter Q2, we had almost 11%, going to be higher at 12 to 14%. The corporate book, Q1 has been lower at 1.6, Q2 has been 10.6. Want to operate the corporate book at 10%. In case we do that, we'll achieve our growth in line with the guidance of 11 to 13. There also we'll try to operate at 13 rather than 11. But let me tell you one thing, this is more of a recalibration based on the actual scenario prevailing in the market. At the same time, I'm also fairly confident that with this kind of growth, I'll be at least aligned to the market growth or better than the market growth. That's something we're very confident of.
Okay. Looking at the credit deposit ratio situation, you're at about 82% right now, right? For most banks, private banks especially, that would be a gold number. They'd be wanting to be there. But then that also allows you to grow the advances still faster, despite your lower deposit growth. Why did you make this choice to calibrate both of them?
See, the reason being, as far as the credit deposit, we want to operate in the band of around 82 or 83 kind of a level. It's not optimal in terms of we can still grow faster, but then we need to be mindful of the deposit growth and the profile of liquidity available in the system.
Correct.
So considering that, I think currently we are at 83.5. We want to operate at 82, 83 level. One thing that you have to keep in mind that our international book is substantial. That is almost 18% of the book.
Right.
And international market, the credit deposit is always more than 100%.
Correct.
At one point of time, our credit deposit ratio international was as high as 120%. Now we have brought it down to 96%. We are going moderately now on the international advance just to keep the credit deposit ratio at a reasonable level. International market, couple of changes happening. Yeah. Actually, the reversal of rate cycle has started over there. Many of the advanced deals which we had at a higher price, now getting repriced at a lower price because the international NIM has taken a cut of around 10 bps. So it's more of a balanced call in terms of how do you construct the book, at the same time achieve certain parameters like the level at which you want to be on the credit deposit ratio, at the same time keeping the margin intact. That's something I think very fundamental as far as the Bank of Baroda is concerned.
When you look at the retail portfolio, unsecured is a piece where you're hearing a lot of commentary from other banks talking about caution on the portfolio. You've been bringing it down for the last 1 year or so. This is even before the RBI.
Before the RBI, yeah.
Heightened the risk weights on this. Why that call then? And are you feeling good about that right now?
No, actually, that is what precisely when I interacted with the market in September 23, at that time itself, the growth of personal loan was almost like 80-100%. We wanted to moderate that growth precisely for two reasons. We wanted to because the personal loan book is more of a data-driven thing. So we had a vintage of almost 2.5-3 years the time in September 23. So I wanted to have a look on the data. So based on the data, actually, if you look at my book is not large enough, very small in comparison to many of the peers. But at the same time, there are two components. One is a physical sourcing, another is a digital sourcing. Now also almost 70% of the unsecured personal loan are sourced physically. Only around 10-11,000 has been sourced digitally. Two things we have done in the process, because if you look at the last quarter growth, it is only at 4.9%. Quarter to quarter, annualized can be around 25-30%. So there are two reasons for that. One, I mean, if you look at the run rate of slippage on the personal book, obviously it is slightly higher as compared to a year back. For obvious reason that we have seen in the system, and that is also true for us. But the amount is not significant. It's very insignificant as far as my book is concerned. My fresh slippage is, let's say, 2,700 crore. This slippage may be something less than 150 crore.
Okay.
So that's not significant for me. My book is less. But in the process of last 1 year, when we moderated, it allowed us to two things. One is to strengthen the underwriting process on the digital loan segment. At the same time, the physical loan segment, some of the segment where the slippage is slightly more, we have strengthened the covenants therein. So I think at this point of time, we are fairly balanced the way the book construct is. But if you look at, yes, there is a bit of elevated slippage, but because my book size is less, that's not significant for me.
Okay. I'm coming to the liability side of the story now. Obviously, there's a lot that is being said at this point in time in terms of there's a war for deposits. People use terms, different terms for that. But what it ends up being, at least to me, is that people are still not, despite a rising rate cycle reaching its peak, people are still not enthused about fixed deposits or, well, CASA, so to say, actually, more than fixed deposits. Why do you think this is? Is this normal? In previous cycles, has this something that you've noticed before? And if you wanted to reverse it at Bank of Baroda, what exactly are you looking at?
There are two aspects. It's normal one way. Because globally we have seen that there is always a sentiment called the risk on and the risk off, right? It's more of a sentiment rather the real thing. So people get into equity market big time if the risk on sentiment is quite high. And that precisely happened in the domestic market for last couple of quarters that we have seen. Capital market, Indian capital market is very strong. I mean, the time when people move to the market, the returns obviously higher than the rate that we offer on the fixed deposit. But in any market, I mean, it's not a permanent risk on and permanent risk off, right? Yeah. Some point of time, the sentiment would turn towards the fixed deposit. I mean, Indian market, the fixed deposit is almost the safest asset that I can think of. Like it may be, we may say gold standard, because we have not seen any adverse incident as far as the investment in fixed deposit is concerned. So in that scenario, I think it's normal. Market move in a phase manner, and of late we are seeing bit of flow coming here. We as a bank, we realize the fact that there is a trend happening. We innovated deposit product big time. We focus on the retail deposit, both on the retail term and also the retail CASA big time. If you look at my growth in Q2 and Q1 also, the retail saving and the CASA growth is almost 7%. That would be on a peer comparison would be better than on the system basis, right? So we have realized the fact couple of quarters back and started refocusing on that. We introduced many of the new products like the SDP, which is a recurring deposit, has been getting good traction in the market. Okay. Our green deposit is, the outstanding green deposit is now almost 700 crore. The master stroke by the cricket legend, getting very good traction in the market, although it's very recent. So I am finding, as far as Bank of Baroda, well prepared to handle this kind of bit of the savers' money getting into capital market, which is an obvious choice, no issue. Indian market, capital market is very robust. People should invest. At the same time, everybody need to have all types of asset in the bucket, right? So fixed deposit is one of the most preferred bucket investment you can have in the bucket. So in that scenario, I think there would be a bit of movement coming to the fixed deposit market that has happened last quarter. Going forward, I think that would further happen. Globally also, we have seen this risk on and risk off sentiment prevailing. In that scenario, I think it's cyclical in the manner at which the fixed deposit again going to be the preferred choice for investment by many of the savers going forward.
As a banker, how do you respond to the argument that it doesn't matter if people are not putting money in banks, because even if they're putting it in the capital markets, it's eventually coming back to banks. The money is held in the system still. So complaining about people moving to the equity market is probably not the right way to say this. How do you respond to that?
No, I believe that actually, that is what I said, that it's normal for people to move to the capital market. If the sentiment is risk on, people would move to the capital market, right? Yeah. I mean, and again I said that no sentiment is permanent. It always goes through cycle and phases. Correct. So it's suppose the savers get a better return, obviously they would move. And the time they find they are not getting a better return, they would move to the safest asset, and fixed deposit is one of such asset class. So it's natural to have this tendency. At the same time, we as a banker need to be very prepared to handle situation and scenarios. And we quite clearly prepared ourselves 3 quarters back when we started focusing less on the bulk deposit, more on the retail deposit. Correct. We have been reducing dependency on the bulk deposit because it's not a bit of a certain tenor, but also slightly a price, elevated price. Correct. The cost is high. So it's natural to have any country where the flow happens between these two markets. I mean, the choice of the investor is always the best in terms of the interest that he wants that to achieve. But at the same time, I also it's not advice but a suggestion that in every bucket of choices, fixed deposit is one of the preferred one that should be, because it is one of the safest asset class that we can think of.
Okay, let me move on to the margin question. Now there, you've seen a bit of reduction on the margin side. You are confident of maintaining it at about 3.1, 3.2%. At a time when your deposit accretion is the focus, and especially retail deposit accretion, which is a slightly higher cost in terms of fixed deposits, at least are higher cost than CASA. And on the other hand, you've lowered the unsecured part of the portfolio, which is a high-yielding asset. How do you manage this?
So, while recalibrating the guidance both on the deposit advances, we kept the margin the same.
Okay.
The Q2 margin has been at 3.10 global. The domestic used to be 3.27, but globally, because we have a larger international book, the global NIM is at 3.10. The impact of the penal charges interest accounting has impacted 5 BPS this quarter, otherwise it would have been 3.15. There are two scenarios that I am anticipating going forward in Q3 and Q4. I am hopeful of some deposit cost moderation maybe in the later part of Q3 or in the Q4 itself. Why? If you look at globally, because we operate in global market, this has already happened. There is a lot of repricing happening both on the asset side and also liability side. Many of the central banks cut the rate. India, the regulator has changed the stance. I think somewhere with a lag, it would come to Indian market. A scenario like that, hopeful of a cost moderation on the deposit, I think then the margin guidance will be in a position to achieve that. The calibration of advance and deposit growth is precisely to keep the margin objective in mind. So otherwise we would have given the old guidance and continue with the old guidance.
Right.
We wanted that calibration to happen because the margin is one of the very fundamental thing as far as Bank of Baroda is concerned, and hopeful of maintaining that. But everything depends upon the market scenario. The geopolitical situation still can actually alter the assumption.
Sure.
But on a normal assumption, I think the moderation should happen to Indian market on the deposit side, and that I am hopeful maybe towards the late of Q3 or Q4 should happen in Indian market.
All right, Mr. Chand, thank you so much for joining us on this conversation. It's a pleasure talking to you, sir. And from NDTV Profit and all our viewers, very happy festive season to you.
Thank you very much, and to all your viewers, a very happy Diwali in advance. Thank you very much.